Hi there, welcome to this week midweek market analysis. Welcome back to the new year as well. I think things are starting to roll off a little bit more actively starting this week. And this coming week on Thursday, which is tomorrow, we do have the CPI year-on-year data from the US coming in. So that's definitely a very important piece of information that will likely create some volatility in the dollar-related instruments. So looking at the dollar index to get started for today's video over here. Okay, last week NFP did send the dollar down, and at this moment what we're seeing is an impulsive drop following that. What it seems like developing itself now is a corrective structure. So we'll give it some more time today as well as going into tomorrow just before the CPI data release. If we can get a decent corrective structure that is looking more of like this, okay, below that 103.40, there's a good potential setup for more downside, which means that if you're looking at the dollar index chart, we can potentially ride on the news to give us that volatility for a potential break to the downside, right? But of course, we will never know what where the market will move, right, when the news release. So what you can do is you can utilize a breakout technique to get involved in it, which means if you get a corrective structure, look for a decent low to put your breakout entry for potential sell, and then if the market indeed move lower as the news release, then that would be an opportunity to get involved in the sell on the dollar index chart. Now, if you don't have access to the dollar index, then of course what you can look out for is the euro. So kind of similar over here, we have an impulsive move, and right now the market has broken above this trend line. If you can get a decent corrective structure going into tomorrow just before the CPI data, then the principle is the same, right? So we're gonna be looking for a decent high here, and we'll be using a breakout entry technique, which means that when the news is released and the dollar does weaken, ideally we want to see that impulsive move above it, okay, breaking through and then executing our buy order. Your stop can then be of course placed just below that corrective structure as a whole. And in terms of target, if you're looking at short-term momentum news aspect, just manage your position accordingly. If you're looking at a swing trade, then of course you can put your targets slightly further ahead. Okay, so that's on the euro side of things. Some of these major pairs here will probably be patient and neutral because last Friday's NFP has given us an impulsive move, and after an impulse move, often we want to be giving it some time to develop into a clear structure before we commit into any trade. So pound dollar over here is kind of similar. Okay, we got an impulsive break above this trend line and a bounce above that 1.1840. So right now, we're essentially waiting for a decent corrective structure to pull back, potentially back towards that trade 250% FIP, somewhere around 1.2068 to 1.2024. And if we can get that corrective structure developed nicely, we can expect more upside on the pound dollar, potentially towards 1.2445. Okay. So this kind of built in quite nicely also with a potential news trade, right? Which means tomorrow, just before the CPI data, if you can see a corrective structure that looks something like that, that can be also a setup to look into a buy opportunity on pound dollar. Now, on the other hand, if we would like to also look at the possibility where the CPI release and the dollar strengthen, then Aussie dollar would be a good one to keep an eye on, right? Because euro dollar and the pound dollar, we're looking at dollar weakness. But the chart on Aussie dollar here seems to suggest that we might see a potential dollar strength on this chart. Okay, or perhaps, okay, what can potentially also happen is the Aussie would be relatively weaker than the dollar, and Aussie dollar can still move lower. Okay, so when you're adopting this approach going into a news that is very significant like the CPI, okay, while we're looking at euro dollar and pound dollar on the upside as of now, and of course Aussie dollar we're looking at downside as of now, when the news release and the market start moving, Okay, either of this are likely going to be the accurate one, right? Either of these are going to be correct, and then the others would probably need to be reassessed in terms of your analysis and the direction that we want to focus on. Okay, but we are not so concerned about, like, what's going to be correct, what's going to be wrong, because at the end of the day, the market is always right, and we don't really care. Okay, what we do over here is, as the market continues to develop, we need to also evolve our analysis, update our analysis according to what the market is telling us, right? So you need to be adaptive, you need to be nimble to maneuver as the market continues to develop. Right, so in terms of Aussie dollar over here, what we're seeing is that we do have this structure that looks pretty corrective in nature. We have a small little bounce above that high here, which kind of broke it, but the market then pulled back quite immediately. So that kind of potentially show us that, okay, maybe this can be a fake break, around the level of 6950. And of course, what we are waiting out for is today and tomorrow, just before that CPI, if we can see a tiny bit of a consolidation over here, or perhaps even a potential little double top structure, okay, then we'll be interested to see if we can get a rejection back down, breaking this little neckline here around 6860 for a potential sell trade with a target at 6630. Okay, so that would then ride on when the news release, the dollar strengthen and pushing Aussie dollar lower. Okay, so that's on the Aussie dollar part, where we have an opportunity to keep an eye on too as well. And then we have the dollar Canadian. Now, for me, I think the dollar Canadian here this week will probably need to be a bit more patient. I don't think there's going to be a setup coming in this week. But what we are looking over here is potentially this corrective pattern is done. We get an impulsive move to the downside, breaking this structure here. So right now we're essentially waiting for that three-wave corrective pullback that is obvious, potentially back towards that trade 250% FIP. Then we can look for a short-term sell towards that 1.3225 low. Okay, so this one probably not going to be a trade setup this week. Maybe you need to wait until next week. And then next up we have the dollar yen. Now dollar yen is clearer on a lower time frame, H1. So we can see over here from this structure we have this top formation, double top, impulsive move to the downside. Right now the market seems to be developing as a three-wave flag, which is a pretty decent setup. Okay, and of course we can also combine this with the CPI coming in tomorrow, right, as potential news trade. So what you want to look out for from today to tomorrow, just before the CPI, is to see and observe if the market can continue to push a little bit higher, but more importantly, it needs to go up in a very, very slow and corrective manner. Okay, it does not necessarily need to come to that 50% Fibonacci level at 133. It can come close to it. It doesn't really need to tag it. But the whole idea is, if you can get a corrective structure that looks very slow like this, we have a 1, 2, 3, and this pattern here would essentially be completed, and from there on we can look for a reversal back towards 129.50. that opens up a potential sell trade on the dollar yen. So one way to look out for it is give it some time until tomorrow, just before the CPI. If this is going to develop correctively, you're going to have a potential low, and you can then use that as a breakout entry setup as well. Okay, so of course tomorrow morning, okay, before the CPI release, we'll also update you guys in some of this market development in your daily report. Okay, so over here anyway, you just keep an eye on it. Cool. So this is on the dollar yen. Keep an eye on the downside. Okay, look out for how the market's going to develop on the shorter time frame. And then we have the gold chart over here. Okay, so gold overall has been moving higher, but this entire piece of structure to me is not very convincing in the upside. Okay, what I mean over here is that I won't be personally looking to buy with this kind of structure. Fundamentally and from a macro perspective, from a long-term perspective, I'm still bullish on gold, right? I still have position running on buy that was entered like earlier last year. But right now with this structure, I'm not very confident in adding in any position, or if you do not have any position, I wouldn't suggest you to go and look for buy as of now. Okay, this structure still tells us that there's a high possibility that this can still come back down. But of course, we don't have that sign of a reversal yet. Okay, maybe what we can look out for is this coming Thursday CPI. If we can get an impulsive break below that 1867 structure, following that a corrective move here, then this pattern would tell us that there's a high possibility of downside. Okay, so goal here, I think this week, the idea is to just be patient, wait for market to give us a clearer sign as to what's next. Okay, so this is definitely not a buy. If we come down correctively, okay, that looks something like this, yes, then this would start to turn out into a buy potential setup. Okay, so we'll need to just give it time and see what the market develop next. Then we have crude oil. Okay, crude oil over here is very, very clear. Okay, what we see on crude oil over here is after this double top break of the neckline, the market pulled back very, very correctively. So overall, we are still maintaining a bearish bias on crude oil. So if you have any trade on the sell side, just manage it accordingly. The target we're still looking at is around $17.30 plus 67.30 as potential target 2. If you're interested to look for scale-in opportunity, look out for 7385 as a potential break. If the market can break below this structure impulsively, then of course there's a very, very high possibility we'll just reach $17.30 and following that 67.30. Okay, so crude oil is one of the clearest setup and structure as of now. The bias is due to the downside. Last one here on the equities S&P. What we're seeing here is generally overall it's still a corrective structure. Yes, we did get a very decent rejection and price seems to come back up a little bit. But that doesn't change the overall structure yet. Okay, so overall we're still maintaining that bearish bias, potentially still seeing more downside, maybe coming back towards that 3763 area. What can potentially turn out over here is that the market can still turn into something like this to give you that potential double top before that drop. Okay, so sometimes you just need to be patient and have the bigger, wider perspective, right? And ask yourself, like, what is the overall structure now? Okay, does it change? Is the overall bias still intact, right? So for now, I'm still maintaining a bearish bias until proven otherwise. Okay, lastly here to cover is the Bitcoin chart. So Bitcoin over here, what I'm seeing over here as of now is that from this high we have a drop, and then from there the market seems to be developing this tree wave potentially as an expanding flat. Okay, so I'm very interested to see how the market is going to react off around this area at 17450. More importantly, if we can get a very strong impulsive break below this low, which is 17130, there's a good possibility we're going to see more downside on Bitcoin back towards 14900. Okay, so if you're interested in some of the short-term trade on crypto, this would be also a decent opportunity to monitor on BTC. Alright, so that's all from me for this video over here. All the best to your trading. Keep an eye on some of these opportunities I've mentioned going into CPI tomorrow, and we'll see you guys in the next video.